And our next guest is going to talk about another, changing environment in the marketplace, and maybe some things that haven't changed. Maybe we're bringing some old things back. Welcome to the program now, Joe Ellis, Senior Vice President of CBIZ Benefits and Insurance Services. Joe, good morning.
Good morning. How are you guys?
Great. This is Doug. I'm joined with Ron Bachman, my co-host. Great to have you on the program today. You coming to us from Plymouth Meeting in Pennsylvania this morning?
I am, just outside beautiful Philadelphia.
There you go. Great to have you with us. For our audience that may not know CBIZ, which is probably a relatively small amount that I know CBIZ, give us a little background on CBIZ, and then we'll talk about this subject today.
Well, CBIZ has been around since the late 90s, and it was a combination of two kinds of businesses. One is public accounting, and we're the 9th largest CPA firm in the country, and the other doing all sorts of accounting and tax and valuation work. The other side, of which I'm a part, is the employee services, and we're doing everything from employee benefits to retirement plans and payroll, and obviously a lot of combination of services to help clients deal with the Affordable Care Act and its impact. So it's really a broad range of services, but it's all focused on either financial issues or it's focused on employee issues.
Mm-hmm. Yeah, you've so when you step back and talk about that, you say kind of a current trend that you see. You're noticing some things among employers lately and some trends. Tell us a little bit more about that, Joe, if you would, please.
Well, there's a lot of obviously consternation about the Affordable Care Act, but when that notwithstanding, when you are faced with managing a significant cost to your business, which is healthcare, there's a couple of trends that are going on right now, which I find interesting, not particularly alarming, but I just find that employers ought to be aware of them. And we were dealing with a client. We were going through some really well done claim data, and we got to the page that talked about the percentage of participation in the network. That is, what percentage of the claims were in-network claims versus not in-network claims. And everybody was high-fiving and slapping each other on the back by saying that the claims in-network usage was 98.9% of all the dollars spent were spent in the network. And I sat there thinking to myself, 98.9% of all the claims are in network. So if ideally this is a preferred provider network, who's preferred anymore if everyone is preferred? And I suppose the analogy is if I saw a store where everything was on sale at 25% discount, and it was always a 25% discount, how much of a discount is it really? And that sort of new normal struck me, and it even took me back probably 15 years, 20 years ago or so when HMOs were much more prevalent, and when HMOs started out, they were looking everywhere they could to get participating docs. And I always thought, I wonder what would happen if everybody was participating. And I think we've reached that saturation point now. So I think that there's going to be some reactions to that on both the employer and the insurer side.
If we get to 100% or near 100% participation, why is that a bad thing?
Well, simply put, if everyone is preferred, then no one is preferred.
Right. Right.
So, how can you have everybody giving a discount? But I think so I think that's the bad thing. There's no separation on any basis in the past for, it was really a financial play. It was a discount deal. We'll send our patients, we'll send our employees to you if you give us a discount. The landscape is changing quite a bit at this point.
Joe, it's Ron Bachman here. I think one of the interesting parts to me on the story you want to tell today is the strategic sort of overview thinking about how markets change. Sometimes we get so close to the forest we don't see the trees, and it's hard to see trends when you're in the middle of the whole healthcare industry, whatever parts you are. And we've clearly been changing what I would call the chasing the risk. Who has the hot potato of risk? In the 1960s, everybody was basically fully insured. In the 1970s, we went to self-insured plans. In the 1980s, at least at the end of it, we started getting into these PPOs that you talked about. In the 1990s, a lot more HMOs and hospital-owned HMOs. In the 2000s, we had account-based plans. And 2010s now, we're focusing on more healthcare consumerism. How do we get people engaged and involved more in their own healthcare? On the development of networks, that really is part of that evolution that started late 1980s and then with PPOs and HMOs. But now it seems that what we keep hearing with the Affordable Care Act, in order to make some of these products affordable, that in fact networks have narrowed. That those everybody's in the network concept of maybe 5 years ago isn't quite as true today under many of the plans in the Affordable Care Act. Is that what you're seeing, and is that a good move then, or are you just not seeing that move yet?
I'm beginning to see a move toward shrinking networks, but very purposely shrinking, and the driver is quality of care. And quality of care is broadly defined as what is the cost to the care that I'm going to get, and what is the expectation of how quickly I will recover. So the networks are shrinking, and they're shrinking using that quality data. And there's tons and tons of data available for insurance companies to be evaluating. And what they're concluding is that the price, the retail price or the discounted preferred price, isn't necessarily that multiplied times the total number of services delivered used to be the way that docs and healthcare providers made their money. Now what the insurance companies are taking the position, we want to have better outcomes for our people. We want to have your patients and our insureds. We want them to get better faster. We want the quality of what you're giving to be higher, and we will reward you possibly with even paying you more money if the outcomes are better. Because ultimately, with fewer readmissions and with fewer complications and with better outcomes, the patients tend to be happier and they get back to work. So there's a bit of a productivity issue there from the employer standpoint. And those shrinking networks will, by definition at this point, be driven toward quality metrics, and that's the way that they'll be getting reimbursed. And that's a good thing for everybody.
Okay. In this trend concept that you're suggesting fits into a pattern of changing in response to market needs or patient needs. You've identified three trends. We've talked about one of them here. Can you talk about the other trends and sort of show your creative perspective of the market?
Well, another trend that we're seeing is something that's called reference-based pricing. And in the article that I wrote, what I said was that the medical insurance industry is changing, and it's also going back to some old things that it tried in the past, rebranding and giving them a new look. Reference-based pricing is in my opinion, is a takeoff on the old reasonable and customary fee structure, where if 90% of a carrier would set the limit on a reimbursement at 90% of what the market was charging, and they would call that the reasonable and customary fee. Now what they're doing is they're saying we're going to call it a reference-based pricing. And a really good example would be, let's say, replacement surgery on a hip replacement surgery. And let's say that all in, that surgery was averaging $30,000. What reference-based pricing says is that anything lower than $30,000 the plan will pay as the plan pays. Anything in excess of $30,000 will be excluded, and it will be the patient's responsibility to pay that added $5,000. If it's a $35,000 surgery, the patient will be responsible for that extra $5,000. And if you, it's a fairly simple way to cap your costs. And the other interesting thing is that the Affordable Care Act has said that reference-based pricing excess. So in my example, the $5,000 excess does not count toward the maximum out of pocket on the part of the patient. So you could have the maximum out of pocket hit on the part of a patient, but that extra $5,000 is going to be on top of that. So that really puts some teeth behind the whole reference-based pricing idea.
So talk a little bit about your view of where you see ACOs coming in to be part of the solution to this problem.
For a long time, I tried to figure out what on earth is population health management, and sometimes I just ask myself the question of what does even the title mean, and I think ACOs are the closest thing to population health management, and essentially, what you're doing is you're linking together the continuum of care that a patient would encounter from the initial diagnosis, from testing, from hospital stays to surgery to rehab to pharmacy, getting the entire spectrum of care from the beginning to the end. The beginning is when you have the condition, the end is when you're free of the condition and you're recovered and you're back to work or you're back to a normal life. And accountable care organizations have arrangements. It's started with Medicare, and it's also continuing with employer groups and insurance companies where they're saying to these accountable care organizations, you guys deliver the care to the population, and let's say the population is a company's workforce. Deliver the care to my workforce, and I will give you X number of dollars depending on what the diagnosis is and the severity of the diagnosis. And it's up to you, the accountable care organization, and your linked up providers to provide the care and have the patient get better for the amount of money that we agree to. And if they don't, then the providers are those that are taking the risk. So it's pretty good. I like the idea of providers taking risk, and I also like the idea of measuring them on the quality of what they deliver.
So when you step back and look at all these trends that you've just talked about this morning, what do you think the impact is going to be on changing the healthcare insurance industry, aside from the mega mergers that we're all, reading about and following today?
Well, I think that there's a couple of fronts that are being attacked in our business in general, and some of it, there's the obvious piece, which is how do we just make people healthier? So you'll see a lot of talk, and there isn't a day that goes by that I don't turn on the radio and hear somebody talking about their wellness program and how it's onerous, how it's penal, how it's all these other things. I'd love to hear the stories that I can tell about people that have gotten better or been diagnosed and never knew they had an issue because of the wellness program. But I also see that carriers and I suppose the industry in general is beginning to question who's preferred in a network, and how do you pass the test of being preferred. I think the reference-based pricing is dipping back into that reasonable and customary approach that we've used in the past. Give it a new name, and it's still pretty shiny. And I think if you look at the accountable care organizations, they are slow to develop in certain areas, but I think when they do develop in certain in more generally accepted areas and bigger cities, you're going to see some significant impact on the health of populations, and particularly in the health of employees, and that all flows back to that segment which pays for it, which is employers.
Joe, this has been it's been great having you on the program, Dan. It's a great discussion, and really sincerely appreciate you taking time out of your day to join us. I want to give you an opportunity to leave our audience with one or two thoughts.
Oh, I think try not to be too frustrated with what either insurance companies or governments do, because in the long haul, as I tell anybody that comes into our firm that's relatively new, I just tell them, listen, I want you to go to employee meetings where we're having conversations and listen to who we serve. And who we are serving is, yes, the employers, but we're also serving the employees who don't really know a lot about health insurance, how to access care, clearly not how to access quality care. So to the extent that we can help them, that's our mission. That's what we love to do, and we do that every day.
Thanks, Joe. If our audience wants to connect with you, let them know how they can contact you, please.
Oh, I accept any emails any time of day, and you can reach me at Joe Ellis it's J Ellis, which is jealous at CBIZ.com.
Thanks, Joe. Listen, enjoy your weekend up there, and again, thank you for joining us this morning.
My pleasure.